60, The Answer.
Get the latest weather, traffic, and news updates online at 560theanswer.com. Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560. The Answer.
Top of the morning, Dan and Amy, amid all of the melodrama yesterday over the back and forths between Trump and Musk. Trump did have a call with Chi-Com dictator Xi Jinping, and here's how he said that call went as it pertains to the subject of a trade deal with the Chinese.
We had a very good talk, and we've straightened out any complexity. It's very complex stuff, and we straightened it out. The agreement was we're going to have Scott and Howard and Jameson will be going and meeting with their top people and continue it forward. But no, I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points having to do mostly with rare earth, magnets, and some other things.
So those reduced trade tariff rates, they remain in effect?
Yeah, we have the deal. I mean, we've had a deal. We announced the deal, and we'll be, I guess you could say, I wouldn't even say finalizing it up, Scott. I would say we have a deal, and we're going to just make sure that everybody understands what the deal is. Okay? We had a really good conversation. By the way, he invited me to China, and I invited him here. We both accepted. So I'll be going there with the First Lady at a certain point, and he'll be coming here, hopefully, with the First Lady of China.
All right, he'll be coming here. We'll play Doral. I'll go over there. I'll play Beijing National, if that's just a course I made up.
Oh, okay. You'll be wearing the hat tomorrow.
For more on this, as it's my impression that tariff policy is the big X factor in terms of what experts anticipate for the rest of the calendar year. Jim Perry is the founder and CIO of Perry International Capital Partners. He joins us now. James, thanks for joining us. Appreciate it.
You're welcome, Dan. Amy, good morning.
Morning. So how will those soothsayers on Wall Street react to Trump's characterization of that call with Xi?
I think positively. The tariff melodrama and the tariff angst and emotion is really hyperbolic. I talked to you a couple of weeks ago, and I was over in Europe, and a couple of cities that are less inclined to appreciate Donald Trump, I'll say politely. And I don't know, 25 meetings, something like that, 30 meetings. And I wanted to talk about the 5 pillars of this administration, right? Lower taxes, deregulation, spending cuts, trade deficits, and national security. And 90% of every meeting was about tariffs, right? And there's a lot of anger over in Europe about Trump, and rightfully so. Europe is in the crosshairs, and they're going to probably have a recession. But I try to explain that it is between U.S. and China, right? And if we can stabilize this Chinese relationship, the rest of the world will do better. Until that happens, the market's not going to like it. So it's positive development because they talked. But the Chinese, you know, they've got a timeline as well. They've got 400 million people working in factories exporting stuff to the West. And if the Communist Party doesn't keep them employed, they're going to have some social unrest. So they have an incentive to get this thing done, too. This is why they talked yesterday. But the Chinese feel like they've got an upper hand with respect to certain exports. And they do. So I think Trump's got an upper hand on a lot of other things. And I suspect that it will be stabilized. It'll probably take most of the year. I think the trade deficit relationship with China will be the last one that gets settled. Europe will probably be right before that. But between now and then, you know, you'll get something with India, I guess, and South Korea, and we'll get something with Canada and Mexico. And then eventually the Chinese and the Europeans will come around because they're the ones that, mathematically speaking, look to get hurt the worst.
Well, what if they don't? What if that doesn't happen?
Well, if they don't, their economies are going to collapse. And they've got an incentive to move forward on this stuff because they need the U.S. and Europe as an export market.
Now, the April income number was good. Incomes increased 0.8%, was only expected to be 0.3, and inflation numbers have been better.
Right.
But Bill Dunkelberg, who's the chief economist for NFIB, small business, the job market continues to weaken, but slowly. He also noted that small business owners, per the NFIB survey, only 1 in 4 reported raising compensation, which was down 7 points from April and the lowest reading since February 2021, and the greatest monthly decline since April of 2020. So I know we had 139,000 jobs. That was the print today for May. But is that your sense that the job market is softening, and even though inflation is down, wages are starting to plateau?
No, it's not.
Okay.
With all due respect to Phil and small businesses, I think, the labor market is very complex. And just like the whole economy, there's different regions and different sectors. But small businesses and the average taxpayer are the ones that are getting hurt the most, really, since COVID, right? I mean, the main cause of inflation is deficits, right? The budget deficit, $2 trillion. So the budget deficit in 2019 was about $500 billion, right? Government brought in $3.5 trillion, spent $4. 24 last numbers, government brought in 5, spent 7. So the deficit is $2 trillion. So the budget deficit is quadrupled, and that's the main cause of inflation. And it hurts small businesses the most. And profit margins of small businesses have a lot. It's much more difficult for small businesses to offset price increases. So that's the weakest part of the U.S. economy with respect to jobs. And they are also the voters and taxpayers. So they want lower inflation. With respect to the numbers, we've had some really good numbers. And I think the disconnect between certain sectors of the economy and the political class and the voting class is really quite downbeat. And I respect anybody that looks forward and strategizes, because it's a difficult thing to do. But, there's an awful lot of data to get through. And I think people tend to be selective about that sort of stuff. And I will say this, that I really believe that the employment situation in the United States is very, very strong. The government, the Commerce Department came out for the quarter and said that the labor force has never been larger in this country. It's 161 million people that are paying taxes, right? And having Social Security numbers. 160 million people. That's higher than pre-pandemic. And that's official, right? Unofficial, it's probably more like 180 million people, most of whom are working for cash and part-time. But the point is, they're spending, right? Personal incomes, as you said, last month were up almost a percentage point on the month, right? And if you look at wages, for heaven's sakes, the Atlanta Fed said that wage growth in the last quarter is up 4.3%, right? That's a national number. At the same time, the sort of Fed's preferred measure of inflation, the consumer expenditures number, came in at plus 2.1%, which is the lowest number since 2021, right? So in GDP, I don't know if you've seen this, but 3 weeks ago, the Atlanta Fed, which was a kind of a nowcast thing, right? Their GDP forecast 3 years ago for Q2 was minus 2%, right? Well, today it's plus 3.8%, right? So the Atlanta Fed thinks you're going to get an almost 4% growth in GDP in Q2. And the reason for that is the wages at the working class are growing. The labor situation in the country, the employment labor force has never been larger, and consumer spending continues to drive GDP. Personal consumption last quarter was up 5.7%. That's 3/4 of GDP. That's a huge number, right? Business investment was up 5%, Durable good orders were up 9.2%, and government spending, which is what we'll talk about in a minute, was up 6.4%. So why are these numbers not making headlines, and why do people in certain sectors of the economy, like economists for the Small Business Association, not talk about that? It's just the disconnect sort of surprises me.
Well, if you believe, the numbers that have come in are the numbers, but if you believe like the Atlanta Fed's projection, then why are you rebalancing out of equities as you announced?
Well, good question. Up until about a month ago, I was 87.5% overweight in the equity market, right? I'm now at 70%. That's for the whole portfolio. So I'm really quite long still.
Yeah.
I'm a little bit concerned about the broader market and the Dow Jones Industrial Average because, any given stock that gets slammed hits the Dow pretty hard every day. Tesla being one, United Health being another. But I think that, investors need to look at really what's going on in this economy, where the job growth is coming from, and where businesses are investing. And it doesn't take a genius. It's the AI revolution. And it is real. It is driving the economy. The government's behind it. And it's an economic Cold War against China that this country cannot afford to lose.
Well, and speaking of AI, in the House version of the BBB, 10-year ban on state regulation of AI, and the provision in the Senate version of the BBB requires states not to regulate AI if they want access to federal broadband funding. So House and Senate Republicans are trying to put the clamps on the regulatory state when it pertains to AI, and basically let 1,000 flowers bloom, as they say. So that's going to be good news for this AI arms race.
Yeah, I think so. I mean, the government does have a responsibility to help foster and support a responsible artificial intelligence environment going forward. And I think there's a lot of risks to that. And I'm not sure a lot of these guys in elected positions really understand the complexities of it. But what I will say is that
I'm sure they don't. Yes.
Right. Yeah. I mean, I don't understand. I don't know that, Bill. I'm not a political guy. I look at the markets and investment returns from an independent standpoint. I'm trying to make money for my investors. I don't want to get involved in some of the things that may or may not come. But what I will say is this: if you look at investment in AI, Dan, and we've talked about this, in 2024, American businesses spent $1.7 trillion on the AI build out in the year. And that's CapEx, that's after tax spending, right? And if you think about the GDP at 3%, you're talking about an investment number after tax of over 5% of GDP, right? And all the numbers that I look, and I'm going to be writing a deep dive on artificial intelligence this weekend. It's sort of half done. But the point is that the government and business expenditures toward the AI build-out by 2029 are expected to be $8 trillion, right? From 1.7, right? So you're talking about, 20% of GDP. So no matter what a politician says, or no matter what, one of these AI guys say, or which AI chat group is better or not, the fact is that it's a race, and it's not slowing down, and it is going to transform the U.S. economy, which is very, very bullish for everybody that lives here.
This is a sort of a one-off question, but just because it's such an interesting case study and it's not getting the attention I think it deserves. I'm talking about Milei in Argentina, which I've been talking about all week. Right. Argentina's economy in April grew at 8% year over year. That was just April. Do you look at something like what the Milei miracle, if you will, in Argentina and say, this is an opportunity to make money so long as this guy's in power? We should be looking at investment opportunities in Argentina?
Right. Well, so, this is a really good point, and I've talked about this a lot, and I'm quite impressed with what he's done down there. And he's an economist, by the way. So and not only has the economy been growing in Argentina at a tremendous rate, but why is it doing that, do you think? I mean, and why can't we do it here? So what he did really, the underlying story was, when he took office, inflation in Argentina was running at like 200% a year, right? He cut government spending.
Yes.
What's inflation in Argentina right now? It's 5%, down from 200, right? Wow. Because why? Deficit spending and fiscal largesse has been eliminated, and the economy is booming. And the politicians in Washington should understand that. If you reduce government spending, inflation expectations will go down, interest rates will go down, and the economy will boom, and the stock market will follow. So it's a pretty simple playbook, and you'd think people would kind of go, gee, all we have to do is cut inflation, right? And the monthly inflation numbers, again, they're getting better, they're 2.1%, but they're still rising, right? And this is why people are so upset, small businesses and households, because why? Inflation, since 2019, pre-pandemic, prices on aggregate are still up over 20%, right? So household incomes and disposable incomes are still under pressure for households and small businesses. The corporations are able to use inflation, especially technology numbers. And, I'll just give you a little quick number just so that your listeners can understand this. So NVIDIA's earnings came out last week, right? And, again, you just have to kind of get your head around this, but their revenues in the quarter were up 69% in Q1 from Q1 24, 69%, right? Their profits were up 37%. After writing off about $8 to $10 billion worth of investment in China. If not for that, their profits would have been up 52%. And the earnings in the top 10 or 20 big cap mega scalers are up over 25% in the quarter. So these guys like inflation. Big corporations enjoy inflation because it gives them more pricing power. These profit margins at some of these places like NVIDIA and Microsoft and Google, they're at 30 and 40%, right? And in NVIDIA's case, it's like 75%. So inflation is really good for the big hyperscalers because they don't have to borrow money. They can use it from cash flow. Small businesses don't have that luxury. And that's why guys like Phil and the FNIB are a little bit more downbeat. But if you look at the broader economy, where the job growth is, are the large corporations. Profit margins at corporate America are doing great.
Jim Perry, founder, CIO, Perry International Capital Partners. James, thanks as always. Appreciate it.
Thanks, Dan. Have a good weekend.
Thanks. And he joined us on our turnkey.pro answer line.
Before you see it on TV, share it on Facebook, or read about it in the paper. Hear it here first. This is Chicago's Morning Answer on AM 560. The Answer.
Big news. Newsmax just went public on the New York Stock Exchange. And millions like you are joining our news revolution. Newsmax is now the 4th highest rated news channel